Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire, and my guest today is Terry Schmidt, CEO of Guild Mortgage and a true powerhouse. Terry, it's so great to have you on the show.
I'm glad to be here.
Yeah, it's so awesome to have you on. And earlier this year, you acquired Academy Mortgage, which was a big acquisition in the space. How has that deal positioned your company for growth?
Yeah, we really respected Academy a lot and kept in contact over the years. And great people. So first of all, we always look for bringing talent that's really going to fit our organization. And we knew Academy pretty well, so we knew that the cultures were going to be pretty strong. And they, were pretty significant size for us. So they brought in about 20 to 25% more volume to Guild, 1,000 employees, about 200 branches. And so we, considerably added market share to the Guild platform. But as we bring people like this in, we learn so much at the same time from them. And, we always feel like it makes us a better company because we are really good listeners. We want to be the best at what we do. And so bringing in new talent and having this, other legacy talent that, has a lot of tribal knowledge, and you connect the two dots, it's really powerful. And it makes us a better company because we take new ideas and we implement them and put them in action.
What do you specifically feel like you've learned in the past almost a year from the Academy leadership team and from the top producers in that originating organization?
I mean, I think number one, that a lot of these people that come in, they're concerned about platform, and every time they come in, they get into our platform. Takes about 90 to 120, 180 days to get acclimated, but they really understand the power that our platform provides them. And for Academy, their culture was so similar to ours that we really continued to understand how important that culture was to make the combination successful.
Sticking with acquisitions for a moment, in 2023, you had another decently sized acquisition of Cherry Creek Mortgage, and that company had a reverse mortgage focus. Why was the reverse mortgage space interesting to you as the leader of Guild?
Yeah, first of all, Academy had a really strong retail presence and great people, great leadership. They were a great add to just their retail platform was a great add to Guild. But the additional plus was the reverse mortgage channel. We had always wanted to get into reverse. We're a retail channel, full service lender. We want to be able to provide a tool for any customer along their aging lifestyle. And we didn't have that reverse mortgage product. And we've got this customer for life strategy where we want our customers to come to us at every phase in their journey along their life. And that reverse mortgage was an important, when you want to age in place and retire, stay in your home longer, that's a product that's, really important to the aging population. So we were just super excited to be able to get that when we brought on Cherry Creek.
And recently you announced a new product in the reverse space. You call it the flex payment mortgage. What is the flex payment mortgage, and how does it help your sales team have those additional touch points with your client base?
Yeah, it's somewhat of a rebranding of the reverse mortgage product because you have the traditional HECM, the fully insured product, the HUD product that everybody's pretty aware of. But there's also additional, products for jumbo loans, The product can be used to purchase a home. So we wanted to make sure that concept of this is not just a traditional reverse mortgage, but you can use it for other things related to a reverse. That was kind of our intent there. And it's going really well. We're doing really well with the product.
And do you think that you'll continue to be acquisitive in 2025? Does that continue to be a part of your growth strategy?
Absolutely. We're still going to look at going forward. We're a growth company, and we have been for years. That's not going to stop. Our organic growth, because of the brand that we've built over the years and the stability that Guild provides consumers and employees, that's really helped us organically to really attract the best talent in the industry from a retail perspective. So we're going to continue to go through the organic side, but at the same time, this acquisition opportunity, there's still going to be opportunities out there as long as the fit's right. But we're pretty particular. We make sure that this culture has to connect with Guild's culture, because we don't want to decay any of the culture that we've built over. I've been here 40 years, so built it for a long time, and I'm really proud of it.
Yeah, that culture makes a ton of sense. Culture fit. We've done several acquisitions over the past 4 years, and it's really important. It's really important that the cultures match. So if you think about the Academy acquisition, that feels like a focus on increasing your geographic strength, right? With your retail network. Cherry Creek is more like a product play, where you're pushing into a new product and giving your sales force more touch points with their customers. How do you think your acquisition strategy might look in the next couple of years? Is it going to be more focused on that geographic strength, or giving you the ability to expand products like Cherry Creek did?
We will do both. If there's something related to products that we can add from an acquisition standpoint, we'd be interested in that. It probably, the more opportunity is likely to be on the geographic side, because nationally there's still so much open space across this country. And so we have so much opportunity, and really, we have a localized presence, and we really get very involved with communities and connections and personal relationships with customers as well as business partners and realtors. And, that's been our strength over the years. And there's so many areas of the country that we still don't have little to no market share. So we've got still a lot of opportunity out there.
Yeah, that's exciting. So you talked a little bit about culture so far across several of your responses. Most retail lenders have access to the same set of CRMs, the same POSs, the same LOSs, and the same rates. So I imagine culture is part of this answer, but how does Guild differentiate itself in the markets that you're trying to gain share in?
Yeah, I think besides the culture and the branding that we've built, and it's been a homegrown branding type, grassroots branding that we've built, we also have a proprietary LOS and servicing platform. So we've built our own technology, and then to top that off, we brought in Salesforce, and we call it our Guild 360, where we developed a kind of a little bit of a semi-proprietary, connection with Salesforce. So we've built a lot of integration with our LOS and our servicing platform to kind of bring it all together for a loan officer. So it's just this power of this platform to be able to connect their customer in servicing, stay in touch and in front of that customer when the customer either needs something or maybe doesn't know that they need something yet, but we know they need something, and to make sure that we keep in contact with them. So that's huge. We retain in normal times, we retain about 80% of our production. So our servicing system is all, our servicing customers all have come from our retail channel. So that's pretty powerful. And loan officers love that. So we're helping support them. And our servicing platform also, we have this dispatch group where they're trained to support different regions of the country. So they get connected with the loan officers in certain areas of the country, and they work with them to make sure that when a customer calls the servicing group, if there's an opportunity to bring that customer back and direct them back to their loan officer for some more help, we have that really strong connection. So that's really, really huge. And I think the other thing that's real important is our coaching program. We have a coaching program. And because we have this culture of, servant culture in communities, it's also prevalent within our employee base. So this coaching program is designed and run by our own successful loan officers. So they decide they want to coach, and we have different tiers of coaching. And then they coach a group of loan officers, and all these loan officers are in different areas of the country. So they get to know other people, and they all kind of talk and work through problems, and what works for them, in their local community may be something that could work for somebody else. And they kind of this servant culture kind of just grows and builds. And so it's those two things I would say are the biggest. And third is that we really do listen to everyone in the field, and your voice matters at Guild. And so we want to hear from all of our employees out there. We want to understand what works, what doesn't work, because if we're not good listeners, we're not going to get better at what we do. And so they have a voice here. That's big.
Super important. Most mortgage lenders, it's a really sales-led culture. Sales drives a lot of what happens in the company. How do you systematize that feedback and that process so that it's not just this, never-ending noise of feedback, but you can actually get insights and make changes based on that feedback?
Yeah, we go out into the field a lot because we are a distributive retail platform. A lot of folks, fulfillment, a lot of them work remotely. And so our leadership, it's even more important for us to get out in the field. So when we're out in the field, we're taking copious notes at what we hear. And we encourage our folks to tell us, what's working again and what's not working. When we've got new people coming in, we check in after 90 days, after 6 months, to see what through the process, even the onboarding process, for example, what worked for you, what could we improve on? And we have an ongoing list. And then we're reviewing this and analyzing it and seeing what are the most pain points that we're hearing about. What do people absolutely love? What are people struggling with? And you'll find that the same types of struggles you'll hear over different areas of the country. And so we prioritize. That's how we do it. Prioritize the biggest pain points. We get those things taken care of first, and we just keep going down the list.
You've been there a long time. What are the issues that continue to bubble up? Is it focused on technology? Is it focused on leadership? Like, what are the things that you are hearing pretty regularly as part of that feedback process?
I think it's just more the market. That's the biggest thing we hear, is the difficulties that everybody's having as far as the business itself, not necessarily Guild. And so, we're just trying to figure out how can we continue to add value? How can we bring more to the toolbox? I mean, an example, social media, just helping loan officers that don't understand how to use social media. So we get those top producers that work with social media. What are you doing? How can we create an enterprise solution for all of our loan officers that they can, work with and take something away back to their own communities and learn and grow from it. Those are the kind of examples that we, see.
I was intrigued by your comment around servicing and that Guild typically keeps about 80% of the mortgages that you originate and add them to your servicing book. Do you have subservicing relationships, or have you actually built a servicing function within the company?
We built our own servicing platform, the technology and the people. So, which makes a huge difference because, like I said, we have this connection between our servicing customer support group and our loan officers. And we've got those connections where if a consumer is calling our servicing group, they're incentivized to help grow the company and to help bring in new business. And so if there's an opportunity when they're talking to a customer where they can say, maybe this something else might be that there might be some opportunity for you to refinance your home or take some equity out or whatnot based on the conversations they're having with the customer, then they drive them back to their originating loan officer. So that connection and driving back to the originating loan officer, because, we have this, every customer satisfaction survey that we've worked with, we always have a huge trust factor where we score better than most in trust. So that loan officer and that connection, bringing them back is really, I think, makes this whole customers for life cycle really work well.
Yeah, the servicing piece is really important, especially right now when you have a lot of the big servicers focused on building technology that will enable them to originate from their book. And if you looked at some of the Q3 financial statements for the Mr. Coopers of the world, Rocket is another example. They were able to ramp up very quickly originating from that servicing book. And so I think by doing a lot of your own servicing, you're positioned well as those servicers try to compete more in the origination space. Was that your intent behind building up servicing, or was it just more focused on we want to be part of that full customer life cycle?
It was more of the full customer life cycle. A lot of these large servicers, the servicing asset is just, it's just an asset and it's an investment. And for Guild, we never really looked at it that way. We looked at the servicing is an augmentation of the origination. And so we never wanted to have a competing channel where a direct lending channel was competing with the retail channel. We wanted to make sure that that customer was always driven back to that original loan officer because they had a trusting relationship and played an advisory role. And a lot of them are keep in contact with their locally with their customer base. So, and studies show that, consumers like to do a lot of the research online, but they still it's a big transaction and they still like to have some personalization with somebody that they trust, that they know they're going to get good advice from.
Yeah. Advice plus technology feels
Yes.
like the winning combination.
Absolutely. Yeah, you have to have a digital experience, but you have to have an experience that meets the customer's needs. How much of it do they want? And how much of a special relationship and more advice do they need?
So HousingWire had an AI summit earlier this year, and I was surprised at how much progress has been made just this year with AI and really integrating it into real mortgage processes as opposed to it just being a buzzword. How is Guild integrating AI into your origination process?
Yes, this year, we just rolled out what we call our Guild IQ or and system, AI system. And what we've done is we've taken, we've got 500 loan programs, over 24 investors that we sell to, and we brought all that in and started using AI for all of any type of search engine and any type of question you have on all these loan products. And it's been phenomenal. I mean, because you think about, you've got a processors, underwriters, loan officer assistants, all these different employees that are constantly needing some type of question answered regarding the right loan program. Does it meet these parameters and whatnot? And this system has been fantastic, and we're just incrementally building onto it. But you have to look at how can you get back to the customer quickly, and how can you be more accurate, and how can you create efficiencies along the way as you're going through the manufacturing life cycle. And AI is definitely a huge part of that.
So we've talked a lot about culture during this conversation. It seems to be a big focus of your LinkedIn feed, and whenever you talk about the company on stage, you're pretty focused on that winning culture. So you've been with Guild, you mentioned for 40 years now. How do you ensure that culture lives on for the next 40 years at Guild?
I think number one, we have to make sure that the people that are coming to Guild, really fit our culture first. And that's extremely important. Our purpose, people want to be someplace that is a growth company. I think number one. Number two, that you've got a good purpose. Our purpose, of building communities and being engaged locally, and this servant culture that I already talked about. Those things are, key ingredients in, we feel, our culture at Guild. And that servant piece where you not only grow, but you help others grow around you, whether it's employees or business partners or the local community. Those things, it creates this I call it the Guild movement. And it's real, and it is important to us because we want people to stay here. And you have to have something and some strong purpose to get people to stay here. And our employee retention rates are very good. People want to be here and stay here.
That's great. And it's really important. If you want to refer your servicing customers back to the original LO, it helps if that original LO is still with the company.
Absolutely.
All right. So it seems like 2025, unfortunately, is going to be another year of higher for longer rates. How is Guild planning to continue to win despite the high rates and the low affordability in the 2025 housing market?
Yeah, well, we're going to continue to grow because we're a growth company. Number one. Two, we've always been a purchase money shop, so we've never relied on refinances. Purchase because we've got local presence in local communities, local business to business partners, and our purchase numbers are, I think this year they've been averaging in the 90% range. And, traditionally, we've always been a good 10% above the industry in purchase business. I think that bodes well for us. But we can also, because of the servicing portfolio and our customers for life strategy, we can always gain more share with refinances once that comes into play. And I think so many of us can tap into that refinance opportunity without a lot of additional overhead. So we can tap into it quickly and be efficient and gain additional volume very quickly there. So I think we've got a great balance for the future. And then a big part of the future is like, what is that homeowner of the future going to look like? And, you know, the underserved is we believe is a big part of that. The Hispanic community is growing twice as fast as any other community, any other type of consumer in the United States. And, you know, we just hired Nora Guerra from Freddie Mac, and she's does a lot of the, you know, Hispanic affordability and initiatives. And she joined Guild. We're excited to have her. And so we're just creating and building more programs around that first-time home buyer that we've been great at capturing anyway, but we want to capture that future homeowner as well. So we're got some plans that we're working on to continue to build that as well. So we're super excited about future. It doesn't, you know, for us, we're prepared for. We've been through many cycles, you know, so we're ahead of the game there, and we're prepared for, you know, anything type of cycle that comes at us.
Where does home equity fit into your plans? Are you partnering to bring that product to market? Is that an area where you might acquire in? How are you thinking about home equity since we have historically high levels of home equity in this country?
Yeah, HE loans, we're doing a lot of them now, and we've got 4 or 5 investors that we're selling on the HE loans. The HELOC programs, they've been a little bit difficult to tap into what a bank has to offer. So we offer them, but the HE loans have been a lot more prevalent. I think there's more investors interested in, you know, the interest rates are at a place now where it kind of makes sense for the investment community to get more involved on the HE loan side. So we're doing them, and it's just another arsenal in our toolbox that we know we have to have as a full service lender.
Terry, it has been so great catching up with you today. Thank you so much for joining me on Powerhouse today.
Thanks for having me.